Hey everybody, Ryan Wakeman here. Just wanted to go over a few things with you about a mortgage modification, aka loan mods. The things I really want to cover here are: what is a loan modification, how does a loan modification work, why should you modify your mortgage, and do you qualify for the loan mod. Mortgage modification, simply put, is a reduction in your principal amount, an adjustment in your interest rate percentage, preferably a combination of both, in conjunction with any deference or forbearance of delinquent payments. It's used to stay or stop the foreclosure from happening on your property, and it's also grounds for a second chance at a fresh new start. How do mortgage modifications work? Loan modifications work when you're falling behind in your primary residence mortgage payments. This is caused due to unforeseen financial hardships. Your interest rates have adjusted to their max rate cap, and or the loan is readjusted to a fixed rate from an adjustable, and you are no longer able to afford the mortgage payments, or if your property's principal balance exceeds the actual value of your home. Why should you modify your mortgage? To save you and your family's home from foreclosure, to take advantage of low interest rates, receive an excused principal reduction, begin with a fresh clean slate, the ability to invest more for the future. You'll be able to save cash right away for that rainy day, build those contingency funds. You'll be able to sleep well at night and live without all that unneeded stress. Do you qualify for a mortgage? Well, you got to be delinquent on your mortgage at least 30 days. If you know this is something coming, you need to seek out help prior to this point. If you're under some kind of financial hardship or burden, but we also need to make sure that you have the ability to repay under the new modification agreement. What's the point of giving you a modification that saves you 50% on your mortgage and makes it a $2,500 payment when you make $2,700 a month? You still don't qualify. We need to seek out other help at that point. Having legal representation doesn't necessarily qualify for a loan modification, but I suggest you get a lawyer, because lenders are starting to sue for doing loan modifications and debt settlements because they want to get their money. Although standard business practice in the bank is discounting notes every day. Do you agree to the terms of the modification? Is the payment current than a slightly less or slightly above the current rental market rate? If not, it's probably not a good agreement, but every circumstance is different. Do you know where to begin? Jump on over to www.usecreditwisely.com. Over at usecreditwisely.com, we'll provide you with a free personal credit and financial performance review and an analysis, free property valuations, equity forecasting, assessments and recommendations, free legal consultation, free financial makeover plans, free business cash flow analysis, free investment portfolio review, and access to a lot of bonus material related to credit, leverage, wealth building, and investment advice. Again, this is Ryan Wakeman. Thank you for your time, and if there's one thing I can get you to take away from this today, that is to use credit wisely. Thank you.